Namaskar and welcome to Sansad Television. I am Vishal Dahiya and you're watching our show Perspective. It will bring you detailed analysis of all key national and international issues. Today we're going to talk about the rupee settlement system for international trade. Now, the Reserve Bank of India has recently announced an arrangement for the country's traders to settle imports and exports in rupees. Now, this move is aimed at promoting growth of global trade with emphasis on exports from India and to support the increasing interest of global trading community in Indian rupee. This will also facilitate trade with countries like Russia, which are facing sanctions. Under this mechanism, exporters and importers can use a special vostro account linked to the correspondent bank of the partner country for receipts and payments denominated in Indian rupees. India imports more than it exports, so the country will also save foreign currency under this new arrangement. To understand in detail how exactly will this work and what are going to be the benefits and, of course, challenges if there are any, we have with us a distinguished panel of experts. Let me first introduce them to you, beginning with, we have in the studio Subhomoy Bhattacharjee, who is joining us. He is the consulting editor with the Business Standard. Welcome, Subhomoy, to Sansad TV studios. We also have with us Mr. Rajeev Mantri, who is joining us, founder and MD of Navam Capital, and Dr. Ajay Sahai, DG and CEO of FIEO, is also with us. Welcome both of you gentlemen as well. Let me begin with you, Subhomoy, and let's start by understanding a bit more about this new mechanism. Two aspects. One, what was the need of bringing it now? And two, how does it work?
Well, why was it necessary now? We can get into it after understanding how does it work. So how does it work is very simple. Whenever an Indian importer or an exporter is paying for their transaction with a foreign principal in any currency, the RBI says, I am now giving you the additional facility that you can also settle that trade in Indian rupee. I mean, it's couched in languages about vostro account, nostro account and all that. We'll not get into that, but this is the point. So if an Indian importer, for instance, is paying for oil, to use a simple example, the Indian importer should be able to pay for that transaction in rupees at the market determined exchange rate with a foreign principal. Ditto for exporter. If an exporter is selling a goods outside, an exporter can ask to be receiving the payment in Indian rupees. Now, coming along to why? Well, obviously, what it does is it expands the applicability or the use of the Indian rupee in international trade. To put it in perspective, most of the international trade, in fact, overwhelming percentage of international trade happens through the mediation of the US dollar. What the RBI is saying is that while you have the option to trade in dollars, we are also saying that we are giving a specific permission to the banks, subject to these guidelines, to settle the trade in Indian rupee. Will it be accepted or not? That's the point which comes on to what you were asking about whether the foreign principal, the foreign party to the trade, whether that party will accept the payment in Indian rupee or not. So that comes the larger issue of why is it now and others, which we can discuss later.
Okay. We'll come to that part as well. But let me bring in Dr. Sahai here as well and try and understand the industry perspective. Dr. Sahai, what changes with this new mechanism for Indian importers and exporters?
In fact, the change is that earlier also invoicing in Indian rupee was permitted, but settlement in Indian rupees was not permitted except for exports to Nepal and Bhutan. Now, RBI has stipulated that you can invoice and also settle in Indian rupee. So definitely it will help in promoting our bilateral trade with many countries. And I'm personally of the view that this is a very timely initiative that has been introduced by Reserve Bank of India. But at this point of time, a lot of countries are having huge foreign exchange shortage. Let us not just look into Nepal or Sri Lanka. Even countries in Africa and Latin America are in dire needs of foreign exchange, and many of them are right now only allowing exports and imports against irrevocable letter of credit. So they know well in advance how much is their foreign exchange liability, not to default on that. Therefore, from that perspective also, this has become extremely important. Beside the point that many countries are under the trade sanction, and therefore, if we have to work out some kind of trading arrangement, we have to look into arrangement in the local currencies also. I think this is a good move towards internationalization of Indian currency also, and probably a move towards complete convertibility of the currency. So far as exports are concerned, we have to look into how profitable would be the mechanism, because even under the dollar denominated transactions, exporters were having some forward premium, and forward premium was a kind of an additional profit which was flowing to them, though of course at a cost of hedging of the currency. For the importer, of course, definitely it's a good choice, because they will be knowing well in advance how much is their liability. So to a large extent, it has insulated the exchange risk from that. From that perspective, definitely it's a welcome step, but let us see whether this is just an enabling provision which will apply to few countries, few transactions, or RBI will provide that clearance to all those who are willing to trade in low Indian currency.
Indian currency out there. Mr. Mantri, your views there on trying to understand how it will change things on the ground, as you know, Dr. Sahai was also referring to, in terms of the way our importers and exporters do the business, and facilitating it via Indian currency. Mr. Mantri?
Sorry, I didn't hear you. Can you repeat that?
Yes, Mr. Mantri, I was saying that we would like to understand how would you assess this new move by RBI, this new settlement mechanism in Indian currency, and as Dr. Sahai was referring to it, that it works really well for both Indian importers and exporters.
No, so as Dr. Sahai was mentioning, the new step here is really allowing settlement of trade in rupees, and I think it's driven by certain exigencies, the situation in Europe and so on. But here the RBI is really cracking open the door towards broader internationalization of the rupee, potentially moving towards even sort of more liberalization of the capital account and so on. And in practical terms, what that means is that Indian businesses, with the due sort of process changes that will come with this reform, Indian businesses will find it easier to sort of do business internationally. And that is increasingly happening nowadays, whether it's a small e-commerce based retail company or consumer product company which is selling all over the world, or other kinds of service providers who are offering remotely delivered services. So the globalization of even small business is a reality today, and steps like this will make things easier for those who are running businesses of that type.
Okay. Subhomoy, now coming to this part, and taking few aspects from what both Dr. Sahai and Mr. Mantri mentioned, the earlier question which I asked you in terms of why now, as in what prompted this move. So one, as Mr. Mantri was referring to, exigencies in the international scenario when we're talking about doing business with certain countries which are facing either sanctions or facing shortage of foreign funds, that is forex reserves in terms of dollars as well. The other aspect, and most important one, and perhaps if you look at the long term, is building the reputation of Indian currency in the global trade ecosystem.
Absolutely. I mean, we should look more at the longer term perspective. Why? Because as Mr. Sahai rightly pointed out, it is not that every one of your correspondent entity in the trade will be willing to accept rupee right now. But a good crisis is good when it is used. RBI is using the current, volatility in the world market and lots of questions about the different currency strengths to introduce a facility, expand rather the role of a particular facility. That is a very good step. Why? Because it creates an environment where businesses can start saying, hang on, I don't need to always be scared about the exchange risk when I'm trading abroad. Remember, that's an extra cost. That extra cost I may, if my product is good or for whatever reasons, if I'm able to transact in Indian rupee. And also remember, this move should also be read with what the RBI is doing in the forex market in terms of managing the rupee. Now, one of the very important things that RBI does as a mature central bank is that it doesn't set a particular value of the rupee. But what it is doing is that while the rupee is moving against currencies, it is letting that thing happen in an orderly manner. It is not important in whether a currency vis-a-vis other currency, whether it's high or low.
Okay.
What importers and exporters get annoyed or naturally is concerned about is when the value changes very fast.
So you're saying that this move may also relieve some pressure on Indian rupee, which it is facing right now.
Exactly. So what RBI is doing is that RBI is saying, and RBI had been doing for several years, I mean, that's the way it's managed it, and that's very good, that it's ensured that the rupee stays in an orderly float. We already allow current account convertibility. We don't allow capital account convertibility. Now, all those measures, there's also been announcements by Government of India that we shall be going in towards global bond indices. So there has been several series of steps that have been taken to make the rupee an internationally interesting currency, which will be used more and more. Remember, among the emerging markets, that's why one of the important things to note this year is that despite all the volatility, the Indian rupee has actually been one of the better performers among the emerging market peers. It has actually done better against all the currencies excepting dollar. Now, this doesn't happen in a vacuum. That happens because the respective authorities, both fiscal and monetary authorities, have been working on the currency in the way that it should be worked on. That is, respecting the market, respecting the demand and supply pressures, despite the huge need of imports and all that, yet allowing the rupee to stabilize. So therefore, it's a very good time when the world is actually getting interested, and we are looking at a further amount of FPI coming in, the tide turning. You would be expecting that, hang on, let me expand the bouquet of services that you can use with rupee.
Okay. And how much does it save in terms of the forex reserves as well?
No, we will not be getting into the measure of how much it'll be in terms of the expectation that it would do. RBI itself would not be getting into that sort of an estimate. But what is important is that by us saying that I have more use for the rupee, I am basically raising the confidence level on the currency. I'm allowing for more comfortable. Both Mr. Mantri and Mr. Sahai said that we are basically pushing the rupee more towards capital account convertibility. So these essentially means that we are comfortable with the rupee exchange rate being determined by market forces more and more. And that is what is very essential.
Okay. Let me bring in both Dr. Sahai and Mr. Mantri here as well. Again, Dr. Sahai, I'll start with you in terms of the way we have to understand this move, putting Indian currency, Indian rupee in the international market in terms of increasing the reputation when we're talking about global trade ecosystem. From the industry perspective, of course, it's going to be much easier for, Indian importers and exporters. But from the Indian currency's perspective and a long-term, horizon, long-term view, which we are looking at here, how does it work out?
No, in fact, as rightly told, let us look into how the mechanism will finally translate, because I'm not sure with what countries we are going to push for that. This mechanism will be ideal to deal with the countries with whom we have an adverse balance of trade and they are willing to invest into the country. So probably the move not only addresses the challenges of the trade, it basically gives a fillip to the investment also. For example, let us say we talk about Russia. With Russia, we have a surplus balance of trade. And if whatever remains in this kitty is decided by Russia to invest in India, that will be a win-win situation. So I personally feel that it is extremely important to choose the country who will be covered by this mechanism. I'm not sure whether individual exporter or transaction will be covered, because going by the instruction of the Reserve Bank of India, it seems that individual transactions may get covered. We require little more clarity. One of the challenges which will be faced because of this mechanism is the fact that at present, all the export benefit aiming to zero rating of exports are available only when the transactions are finally settled in free foreign currency. Now here the transactions are being settled in Indian rupees. So by that analogy, probably the exports benefit, be it advance authorization, duty drawback, ROTAP, ROCTL, EPCG, they will not be available. But our view is that similar kind of analogy which was drawn for trade with Iran, export benefits have flown down. So I think if a clarification is also issued by the government that will help the trade, particularly the exporter, to take a position on that. It's I think, a long-term measure. We may start with one or two countries, or maybe with limited number of transactions, but as we gain experience, probably we may roll it out for many other countries in times to come.
Okay, okay. Mr. Mantri, how would you look at that, a long-term view when we're talking about the way India is projecting its currency in the global market, and the central bank, the Reserve Bank of India, moving towards further strengthening the Indian rupee?
So if you take a historical perspective, ever since independence, most policymakers have always had a view on preserving foreign exchange. Are we having enough foreign exchange in the country? And designing policy with the view to sort of basically accrue and build up like a large reserve base, especially in the aftermath of the 1991 crisis. But I think where we are going now as an economy, we are already at a $3 trillion GDP level. There is always talk of like, can we reach 10 trillion? Can we reach 15 trillion? The Prime Minister had said 7 years ago that can we reach a 20 trillion GDP level. So obviously, when you scale an economy to that degree, a lot changes. And along with that, what needs to change is the mindsets that we have in India of like defending sort of too much and being too conservative. So when you have a large economy, a large sovereign like India backing a particular currency, then we should not be afraid of internationalizing it. We want the rupee to become a hard currency. We want people to use it all over the world. Now, for different reasons, people may or may not want to use the yuan because of the situation with China. But India is a friendly country. India is a democratic country to much of the West, is a friendly country to much of the West, and it's a democratic country. So I think the rupee will be much more amenable in that sense to countries, even if, let's say, the experience of China has been something else. So I think we should look at it in a slightly aspirational manner and a slightly ambitious manner. That as the economy grows, we need to approach these things with more confidence and bad on the front foot.
Okay. Subhomoy, as Dr. Sahai was referring to, in terms of course, some clarifications required with the individual transactions when we're talking about the settlement mechanism. But from here onwards, if we have to, since we're talking about the long-term view here, and what exactly will it lead to? How do you think this should move forward? Because vis-a-vis individual transactions as well, and further road ahead, because this, of course, cannot be just one step. It will be one of those steps which will eventually, move towards making Indian rupee an hard currency.
Vishal, that's an interesting point, because over the years, successive committees have actually offered RBI a laundry list of the steps required for India to move. And they have also said that these are subject to India achieving this. And as you can see, the RBI has started moving. It had moved earlier, but now it's moving even more. And very interesting thing, both, in fact, Mr. Mantri also referred to that point. In earlier episodes, when there was a foreign exchange crisis, this time we don't have a crisis, but the point is when foreign exchange outflow for some time has been more than the inflows, RBI would go into a fairly defensive mold. What would it do? It would impound, and Dr. Sahai would remember, foreign exchange inflows. It would tell exporters that, if you earn foreign exchange, you cannot hold it back outside. There would be restrictions on ECB clearances and so on and so forth. These were sort of sledgehammer type heavy restrictions. This time, RBI has not taken any of those steps, because RBI is confident that it doesn't need to take those steps. It doesn't need to interrupt the flow of business. Instead, it is saying that I sort of seem to feel that the rupee is doing well. There are fluctuations going on, but it's an opportunity for me to make the rupee more interesting to the traders.
Okay.
And this is one of the steps. So that point, that it is just not just one step, it is one of the steps. Some days ago, RBI announced another measure, which is that it said that FCNR deposits, that is currency deposits made by NRI, into Indian banks will not carry an CRR, SLR liabilities. What does that mean? It means that there will be better interest rates. Essentially, that applies for both for foreign exchange denominated as well as rupee denominated NRI deposits. So essentially what the RBI is doing is, it is giving more space, more play for the rupee. And you would expect that as inflation has been kept more or less, RBI is also moving in that direction to stamp down the pace of inflation. It will be expecting the rupee to perform even better. So if it's performing better, then we can keep on taking steps to make the rupee more attractive to the world of business to deal in, because there's no loss of value there. You actually gain by using rupee. That's what RBI is trying to say.
And how much does it contribute? Since you spoke about the value of rupee vis-a-vis the other currencies, how it performs, how will it contribute to that part? Because that has always been a cause of concern.
Absolutely. So for instance, right now what you see is that the rupee is something like close to some 980 to $1. Now, but again, if you compare it to the euro, or if you compare it to the GBP, or if you compare it to the yen, you'd notice that actually its value is rising. So if this sort of a thing happens, I would expect, not immediately, but gradually the thing to emerge. And of course, there's the advantage that we get, the short-term advantage that we get in denominating both Russian oil business as well as Iranian oil business to be denominated in rupees. That gives a tremendous amount of comfort to our traders to be able to deal with it, and sort of creates a, not just I would say pressure, but also larger play for those countries to use the correspondent accounts in India to use Indian rupee. Now remember, this was something which was always a negotiated and a very pain point. Iran and Russia didn't have it earlier, but Iran used to say that we couldn't use the rupee web balance in the Indian designated accounts to advantage. Now you can. So that's a very major significant thing. And since sanctions are going to be all around, it's probably a very useful step.
And that sends a very major signal to the global trading market and the ecosystem there as well. One last question before we wrap this up, Subhomoy. And if you look at the sequence of events and the measures which have been taken by RBI, the situation internationally, both in terms of economy as also in terms of geopolitics also, because they're closely intertwined. What might be the next logical steps when we're talking about how the central bank navigates these intricate issues?
Well, one of the things I would expect is that there would be certainly much more work now on CBDC, the central bank digital currency, because that is becoming important, and how the Indian CBDC plays out will be very significant, because that's a new sort of currency arrangement, and what our steps RBI takes. Simultaneously, if you remember, RBI has recently issued a financial stability report where the banks in India have now got one of the lowest level of NPA, which means that the Indian financial system is actually looking rather solid after a very long time. Now that means that there's a comfort level for RBI to take steps to essentially let the rupee play against currencies without needing to intervene aggressively. And that is a very important thing, because that allows RBI the space to look at more development policy space. Now that might seem people that why are we actually that interested? But actually interested because it makes it easier for business to raise loans. And that's because the interest cost becomes easier. And that's very fundamental advantage.
So it'll have to work both ways, and it can't just be one step as you're pointing out. It will have to be counted as one of these measures being taken in the bouquet of measures by the central bank and of course the government policies as well. Thank you so much, Subhomoy, Dr. Sahai as well. We would like to thank you and Mr. Mantri for sharing your views and input with us and our viewers. As our experts were pointing out, clearly when we look at the recent measure which has been taken by the Reserve Bank of India, it is indeed significant and important as well, not only in ensuring that the Indian currency does obtain a significant value, but also in the long term, building a reputation for Indian rupee in the global trade ecosystem, and of course, looking at short-term targets also. We'll come back again with all the details related to this aspect and various other issues as well. Till then, keep watching Sansad Television. Thank you.